Alright, it seems like I was having some technical difficulties, but it seems like we may be somewhat back on track. But as you can see around me, please like, share, subscribe to the channel if you want to know more about smart money. We're just going to be doing a quick one today, as there's not been much going on in the market the past couple days. So, since there hasn't been much going on in the market, just jump right over to the charts. There we go. All right. So what are we looking at here? We are looking at DYDX. Whatever that means. No, I know what it means. It's a decentralized exchange. I just it was the only one moving today, basically. Everything else seemed like it has been in consolidation mode, going down slowly. This one actually had some movement, so that's why I decided to trade with it. And what I did was find the daily. Alright, so right now I'm on the 4 hour, right? So we go to the daily. Found the daily bearish order block. Alright, so how do you find the daily bearish order block? You find the how did I find it? Oh yeah, it's up here. Alright, so it is this rectangle right there. And what that rectangle is this green candle right here. And I will highlight that for you. Bam. That green candle right there. Why is it the daily bearish order block? Because that is the highest candle in this formation that also has a bearish candle that closes below it. So, I mean, there's another one here. As you can see, it runs up into it and then drops. So this is basically acting as resistance. So, as today, it runs up into it. What did it do? God, it felt that resistance. So once I watched it go up into the daily bearish order block, I decided that the entrance would, I tried to enter inside the daily bearish order block, or at least somewhere around where the bottom of the daily bearish order block goes. And when I mean that candle, I mean the body of the candle, not the whole wick and everything. The body is where most of the volume takes place, so that's the most important part. And if we get down to the 4 hour, you'll find that the wicks did not close. Or the wicks went through the 1 hour fair value gap, but not by much. You can see barely they went through it. So that's why I would put my stop loss there. But I put my stop loss there, and I said if it closed below, or sorry, not below. If the 1 hour, I should say, be more specific, the 1 hour closed above that, that's when I would basically close the trade myself. That would be my stop loss there. I don't like having stop losses that are just numbers, because things can happen really quickly and then go the opposite way, and you can get taken out of a trade, because that's how smart money operates, right? So smart money operates in a way that they can control the charts. They can come toward your liquidity. They know where your liquidity is lying, and they can snatch it, and then they can take off with it. And if you have equal highs, close to equal highs, something like that, that's around the area that they would love to do that. Because a lot of people would be having buy stops around these areas, and buy stops basically means once you pass that point, they believe it's going to keep buying. Well, if you had a buy stop in that area, you got screwed because it went through your buy stop and then pulled back. So, sorry you didn't catch a breakout just because it went above your, resistance level. You got to think outside the box on these things, guys. And I'm hoping if you've ever seen my videos, you're aware of these things by now. So I called two different exits, two different exit strategies. One would be the breaker slash one bullish order block right here, where this green candle is, right? So uh, it's a breaker. I mean, you could. It's also, if it's underneath it, it's considered a bearish order block, right? Because it has the bearish candle closing below it. But since the price action is above it, it is considered something else. It is considered a breaker. And how it's considered a breaker is because of a low, high, lower, low scenario. During these low, high, lower, low scenarios, you will find that this region will act as support. And generally, what will happen is that it will go down into the support level. Sometimes it'll start right at it, get rejected, because this is what people call a retest. I don't believe in a retest. That's not what everybody believes in. It's retesting what? What are you retesting? Right? A plus 2B equals C? I don't know. No, it's a breaker. And how they got that name, I don't know. You ask my mentor. He's the one that invented it. But generally, it would come down, and plus you're also within a 4-hour fair value gap. Geez, so you have a huge imbalance between this candle and this candle that needs to be filled, right? Or that should want to be filled. It doesn't always have to be filled. As you can see, what probably happened with this, and it probably got close to the middle of the fair value gap, which is what we would call the consequential encroachment. So, wrong thing. I should put it there. And so I'm gonna put a fib here. What did it come down here? I got the 20 to 30%, and here is the 50. Yep, almost nailed the 50%. So, geez, it's crazy how almost accurate all of these things are. So since it came near halfway through, also above it, that you see that rectangle going through it. That is a 1-hour fair value gap. That came from way back over here during the 1 hour. That if we go ahead and go to the 1 hour, let's do that. Why not? So I can show you what it is. Actually, that's not a 1 hour fair value gap. I don't know what the heck that is. That's more like a 1 hour breaker. Um, that could be a daily, actually. Hold on, let me look. I don't know what I did wrong here. Yeah, that's a daily bearish, or sorry, daily fair value gap. Let me fix that there for a second, because that is completely wrong. Okay, so that's a daily fair value gap. So that is an imbalance, and whenever you have an imbalance, and then also you had two wicks come up into it, pull back on, and then you had the other candle go straight up through it. Well, basically that caused another imbalance. So it didn't mitigate, basically. Mitigation means that price would go through from one side to the other and then back down. I mean, it can go through it too and then go back down, but with a day for each one of these to leave that open of an imbalance or leave a fair value gap that big, that means that there's an imbalance there, and that means it needs to get filled. So comes up, it's the bear shorter block, right? Bear shorter block is probably very, very big rejection area. And so I split the stop loss at the top of the bear shorter block. Again, only if it closed, with the hour outside of it. That's when I would close the trade. And then I would watch for it to come up to the 1 hour order block and see if it would get up there, or at least halfway through, and then maybe put another short. But it came up into exactly where I wanted it to, and then started shorting. And let's actually go to 1 hour now. So as you can see, it did come in here. I know that it poked through, but that didn't affect me at all. You can see they're both really close to closing at that. Well, actually, that's not even fair value gap. That's a different fair value gap, or a different order block. So I wanted to say I drew all three order blocks here. I have the daily, the 4 hour, and the 1 hour all sitting up here. But up here, it gets into maybe see. Okay, it is the periwinkle, I guess, colored outline is where the 1 hour fair value gap is. Okay, so you can see that it touched the 1 hour fair value gap. It didn't close inside of it, it just went inside of it. And that was it. So, and after that first started coming down, that is when I entered the trade, right? And if it would come back up, but hey, add a position, why not? Because it's going back up into that area, and it's hitting a bearish order block. So, the bearish order block would be this candle here, the last up candle. Let me get rid of the path as well, because the path is not helping us out. I think I drew that for my idea that I put out there on Tradingview. But straight across here, you have a bearish order block. So up into it, hits it twice, and then boom, drops it, and it dropped down to where I thought. Well, take profit number one would be the top of this order block, right? Then halfway through, you might take a good 20%. And it took a little bit there, and it's it left another huge fair value gap. So it could reach back up, maybe back up to 50%, or 30% of actually what it is. That whole wave there, right? And that's probably when it ended the day. It was probably somewhere around that 20%. Oh, it was, yeah, exactly. So that's again the lesson that I taught last week. Bottom to top. Within a wave, and it's going to drop. It's going to drop usually about 20 to 30%. And then next week starts. As soon as the next week starts, boom, drops again. So it's to the bottom of this fair value gap. Also probably halfway in between the consequence of encroachment. These are not coincidences, guys. These are planned. If you didn't watch actually, I didn't put up my last video because I was having technical difficulties. The one before that shouldn't even be up because there's no, I don't even know how, but there's no voiceover at all. I actually recorded a voiceover on it and made a whole iMovie thing out of it, and it still didn't work. I don't know. But today I think we're working better. So it came down. So now we have a 4 hour fair value gap, and just above that, right there it is. Right. So what we could see, as soon as I can get the path out, I forget which one is on. There it is. You could come into it halfway through, something like that. Constant encroachment. You gotta look at these guys over here, right? Because that's gonna be basically your resistance. And so even though it looks like it's trying to go down, I don't think it's going to. I think it's probably gonna be popping back up to one of these levels here. That we're probably somewhere in that 30% that's hanging there. And then, who knows? It actually probably could bounce off the bottom, back up to here, which is where this is, and that is another bearish order block right there, which is sitting at 338. And you know what? I always forget to do this. That guy, I always a fan that or somebody watches me, yell for not having big enough prices on the side. So let's make those a little bit bigger. All right, so it could do that. Start filling up the for value gap. Probably wouldn't fill it up all the way. Why? Because it needs to come back and fill it up. But it needs to come down to this breaker. That's where it needs to come down to. So after that, I believe it was start heading down. Plus, you got 2 equal lows here, right? Especially on the 1 hour. There is liquidity below that, so definitely break that liquidity. Didn't mean to close that like that, but coming up, just to redo this really quick, come down below this liquidity would, this is where everybody would have their buy limit set, right? And trigger those buy limits, right? Pull up a little bit, and then everybody would start buying, and then smart money would go, you stupid idiots, and then go the other way. And probably bounce off the breaker first, because then they would think that was a retest, and then they'd go, you stupid idiots, and then they come back down into the bottom of it. And why would they go to the bottom of it? Because that's what typically happens when you have a breaker like that. And then you might have some consolidation inside the breaker for a little bit. Then it'll probably hit the top, and then maybe drop again. I don't know, because there is another bullish order block sitting down here on the 4 hour, and that is just around the 80%, which is where most of all of any kind of pullback pulls to. Look at where Bitcoin is right now. It's sitting around 80%, or Ethereum, or any big, I mean, we're talking about major, those are the huge spiked ones that came down all the way. But even in the smaller ones, even, everything is in fractals, right? I do believe in fractals. Fractals are all over the place. It could get down to that 80% and hit that bullish order block before we start seeing it move up again. So I know everybody got excited to see, DYDX starting up. Hate to tell you, and this is no way financial advice. I am not a financial advisor. But this is what in my experience and what I've seen, this is what I believe what would happen. What could probably happen, it was probably hit top of this breaker again, pull back down a little bit, and so that way you have it up top, right? So you have people thinking that this is going to be a resistance, and probably pull up a little bit again, who knows, and then everybody's thinking it's going down, and then goes right against you, right? And now you have filled the 4 hour gap, you have filled the breaker, you have hit the 4 hour bullish order block. All of that has been taken care of in just that one move, right? And it looks simple, but a lot of people would probably be using, moving averages or, some kind of, I don't know what other weird indicator that they have, but that doesn't tell you anything. That tells you what happened. Moving averages is an average. That tells you what happened, how many, candles beforehand. How does that going to affect what's going to happen in the future? It's not. What is going to tell you what's going to happen in the future is liquidity and imbalances. That's what smart money looks for, right? And also, of course, where to buy, right? And where to buy is going to be at discount levels. Discount levels is at the 61% and below. That is the discount array. That is where they like to buy. Sometimes they don't even like to stay down below there that long. So we could see just a real quick dip down into it, pull back, and then dip down again, and then out. Because they don't want you to be down there that long to be buying up either. Right? But again, I can check my Twitter. You see that said, I think I said, say it with me now. All charts are manipulated because they are. They are manipulated because 73% of institutions are bullish on crypto. If they're still bullish on crypto, that means they're buying the crap out of it. But they're probably a lot smarter about which ones that they're buying. They're probably buying the ones that are tried and true and not doing the ones that are doing these weird experiments like Celsius and FTX and all the other ones that have failed. So, but if you want to know what I think that's what's going to happen on DYDX, this is what I think it's going to happen. There's not really much going on anywhere else, to be honest. I mean, I checked out Ethereum. Ethereum is just in a consolidation. Same kind of with Bitcoin. They're all like in a consolidation. Let me see here. We can look at them really quick, but I mean, I'm not going to be really getting into these. Because I call, the bottom of Bitcoin, basically, or the current bottom of Bitcoin, and just to make sure that you do understand that did do that. Over here, it looks like some people actually liked my idea for DYDX. I'll click on that, maybe open my ideas or something. No, we'll go to the home page. That'll work. And while we're waiting on that, let's check out Bitcoin, see what's going on over here. Okay, it's getting down to the point where my original, that blue line was my original area, my original line of a take profit of a short about a month ago. And so we go back to my ideas. I will find an idea for you. If you haven't seen if you've seen my videos, you probably seen this before, and you're like, I don't watch it and say this again. But if you haven't, I will show you that these things, calling these things are possible. If you know smart money, basically. If you don't, then you're not gonna know what you're looking at or calling. Some of these failed, but most of these didn't. Downfield for sure, I think. That one failed, I think too. That one didn't. That one didn't either. XRP, that one didn't. The gold one didn't. Those all did good. I don't know why they did that to my SPY one. Why they took that one out? Because I was joining on. Oh, here it is. Bullishness. Last short before bit. Near 15,825. What was the date? That was updated on October 4th. Updated. That wasn't created. That was updated. Look, it was created September 27th. So, jeez. God, I forgot how long ago it was when I did that. So, September 27th, I was thinking, okay, it was right. It was after it ran up and then dropped down. I thought it was going to just pull up probably halfway through this. Fair value gap and drop. I thought it was going to happen quickly. Well, little did I know, I'd be having to wait a very, very long time. Then I go through and I explain why I believe why I came to that analysis. And basically it was because there's a fair value gap that happened in December of 2020, right? Fair value gap is the gap between a full candle, pretty much the body of a candle. It's generally the body of a candle, because on the opposite side of each end of that body of the candle, there's going to be two wicks, right? And if those wicks don't touch, then you have fair value gap. If the wicks do touch, that's called balance, right? And if the wicks don't touch fair value gap, that means an imbalance. And what price likes to do, price likes to seek balances. So that's where I thought it was going to go. And also, if we take a fib and go with the fib from the top to the bottom of the fair value gap, you will get at least look at the 50%, draw a line across the 50%. That is called the constitutional encroachment. That is more than likely where it will strike first. Now, after that, I don't know, because it doesn't always have to fill in the imbalance, but it is going to try to at least halfway through. And that's called mitigating the fair value gap, making sure that the balance, that there's balance within the chart. That's exactly what that's all about. So, and this is basically the first time we had that big run. Where did it come back down to? It came back down to, but a little around the 80%, a little bit lower than the 80% before it moved up. And then, that's what I was saying was going to happen this time. If we look at around that same area, it the exact same place. I kind of give a brief summary on how smart money works. If you have this, where you have these these candles that are acting like there's like a resistance level, and that it's not going to be going any higher than that. You're going to have a bunch of dummies. Sorry for you dummies that did this, but a bunch of dummies shorting it, going, oh, yeah, they're never going to go past that. Hey dummy, guess what it did? It went past it. Well, no, it didn't do it just then. I think this one here. Yeah, and so there's a 50-minute gap, or 50-minute for value gap that was, oh no, yeah, that kind of down to 4 hours. So this is still that same high right there as this one and this one. They're all the same. I don't know why I put that same thing twice. It makes no sense. But then now I have this one, right? And then I said, boom, called it. Because I did. I said it was going to go up and through it. And it did. And it hit the 15-minute bearish order block. You can see it over here. Hold on 1 second. And after it hit the 15-minute bearish order block, okay, that's when I start looking at larger candles again. Because once it hits a fit, it's kind of how I have to do things. I always have to do a high time frame analysis all the way down to the bottom 15-minute analysis. And then something like that happens, start all over again. High time frame analysis all the way down to 15-minute analysis. Try to figure out where your premium and discount rates are, which is your 60%. If we flip the Fibonacci upside down, 61% is going to be on the top. That is your premium, which is where most of our money like to dump things and try to make the price go down. Because at that point, price is too high for them. And as it's going up into that 60%, a lot of people are buying thinking that it's going to take off. No, you got to understand that there is a premium that people don't like to pay for, and then so they'll sell it off and also short it at the same time so they can make money while they just sold everything. And that's the easy way to explain the manipulation of the market. Sorry, I kind of stuttered there. But that's basically how it works, and that's how it came to be. Where is it? Okay. But after looking closer into it, I saw another fair value gap up there, and I thought it would probably get to that fair value gap, and it didn't. And once again, I'll show you. Sorry if I'm taking up some time, but I realized there was one thing I had forgotten to put on this chart, and it's still not showing up. Hold on. I'll get it to show up, don't worry. I forgot what it's called. Oh yeah, okay. Pointer pro. That's what it's called. Boom. There you go. Wait, actually not showing up for some reason. Oh yeah, never mind. There it is. Okay, now you can see the red circle on my screen. Okay, never mind. That's a question. So, all right. So when we look at this, I'm seeing that there is variety gap up here, and so I'm going, okay. So even though it dropped, it's probably gonna come back up here and hopefully drop again. And it didn't do it. I mean, it did, but okay, I guess I take the things another look at it. But yeah, there's where it was. This is what I was talking about. That was from afar, and this was getting up close. And I saw the 1 hour fair value gap, and hey, it's probably gonna come up into their value gap. And I also said to extend the stop loss because I knew it was gonna come down, right? So basically, and it depends why I said, especially on the recent one of the ETFs, why to 12 the close, not necessarily where the price goes, right? Because the close is going to tell you little things. So yeah, so I call it come up here. What do? It came up here, and basically 2 1 hour candles filling the exact same thread you got. So after that, it's mitigated, right? So now it can go anywhere it wants. And it went sideways for a very, 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 very long time. And up until the point, I guess I could actually show you where it did go to. Well, we didn't get Bitcoin. And actually, it's more fun to do this. Actually, hold on a second. Go to the top and we hit play. And it doesn't do anything. And people are like, oh, you're an idiot. And we hit play. People are like, oh, man, you're an idiot. It didn't hit. And we hit play. Like, oh, man, you're an idiot. And then this starts to move up. And people are like, man, you're an idiot. I'm like, you sure about that? No, I'm not an idiot. It's called smart money. All right? And this is how it works. This is exactly how it works. I'm nothing to it. And the indicators on the screen. Don't believe indicators. You don't have to have indicators. You don't have to have Bollinger Bands. You don't have to have moving averages. You don't have channels. You don't have any crap. All you know is where the imbalance is at in the charts, right? Do a high time frame analysis all the way down to a small time frame, right? Understand, where the liquidity is as well. The high lows as well. And then just understand that, stick with it. If you see something, and especially something like big as that, how can you not go against it? Like, there's no way. I don't know what's going on. I think I said this in my last video, but I don't think anybody heard it. But somebody was in, I think it was the Telegram channel. Somebody on the official Coin channel. Ranting and raving about bullish again, friendly bullshit. You can buy in. I'm like, whoa, dude, you need to calm down. I was like, what in the world is giving you this idea that we are bullish right now? I was like, did it break any structures? Did it, is there anything that would give some kind of definitive answer as to why we're bullish right now? Whether it be Ethereum, whether it be Coinbase, Bitcoin, anything like that. There was really nothing to set it apart, and once I'm gonna do it, of course, and you should give it bigger time frame, you'll be able to see it. I'm not trying to talk too much in this. I'm trying to get some shorts. I got to bed soon. But I'm going to show you what to look for. Whenever you think that, especially like I said, the better value happened so long ago. But that's what you got to look at. What's happening on the left side of this chart. It's not about what's happening right now. It's about what's happening. It's about where price has been. That price, the price action remembers the levels that it's been to. That's what it remembers. It doesn't know if it's making a triangle. It doesn't know if it's making a wedge. It's not either crap. What a wedge is, or all that triangle is, basically bouncing back and forth between, bearish order blocks and bullish order blocks. That's what it's doing. And it somehow creates a wedge, and they're like, oh, it's going to here, and then it's going to drop. How do you know that? Just because it made a shape? No, it's going to be looking for either an imbalance or where liquidity lies. It's going to attack the liquidity, or it could be resting right above that triangle. That triangle could have caused it, 2 equal highs, where people have their sell limits set or something like that. It could be coming up there, try to sell limits, pull back a little bit, and get everybody to believe that it's going to sell, and then all of a sudden, smart money just boom, takes it up the other way. So do. Then really starts institutions to take care of you. They care about their pockets. You care about your pockets too, and understand how to trade, and how they screw you every single time. So, speaking of that, what was happening before this? What if you think this is going to go bullish? I'm on. Okay, but broke a high here. Right? Okay, we got 2 highs here. It's probably gonna break that, right? Hit him. Broke that. So where are we at in the grand scheme? Did it break that? No, it didn't. And that happened September 22nd. It happened days before I called this. This came up, and basically a lot of these guys here, part of the market maker buy-sell model here is what we're seeing in different parts of the chart, being in consolidation. This came up, hit that consolidation, goes over there, boom, let's go back down. Basically what happened with it. So until it rises above this, which is actually at a discount level, believe it or not. So we are in a discount level, meaning that the whole chart, I think this is where, if we were to go to the monthly, that same line, if you put the fin right spot, will be 60%, basically. So let's go. Let's do this. So I can explain to you how this. I must have forgot about that. I should look in right in weekly fair value gap later, wherever I find it again. But if you look at every fair value gap that has ever been created, especially on the way up in Bitcoin. And here, another one I actually got. Whatever. Alright, so what I'm going to do is I'm going to remove all these little Fibonacci's. I'm doing those right now. Again, I think I explained this in the idea, and I posted as to okay, so we're making things where you put Fibonacci. A lot of people always put it like slow, so they'll go all the way back here, and put Fibonacci and put it on the printout. No. What you do, hopefully that body. Okay, what you do is you look for the most recent low before reaching high, right? So here we have something high, right? Very low, right? Comes up, but now I'm going to delete also the low here. That's the most recent low before it comes and breaks that high, where that red line is, right? But that's where I I would put my Fibonacci. Okay. Maybe I'll I think my cream must be some kind of bit pattern, but the cream is right around this area. If you're to go back to, I don't know, let's go with this low. Now you're going to be off. I mean, this is probably why people probably started. Oh, well, as you can see, yeah, this is where people tried to buy. Because this is what created fair value gap. Because this is where the wick stopped just below the 61, or just below 60%. So, this is probably also smart money to do as well. Using that as a tool to enter reference to those that don't understand how to use Fibonacci. That, hey, if it gets down, they're trying to put the Fibonacci here, wait for it to get down here, and then start buying back up. And then they're, I think they hit the right 60%, and then once we, it was also a fair value gap right there, right? And it came back up through it, and fell again. So it mitigated that money fair value gap sitting right there, and then just dropped by because you probably had it wrong fit. It had right here. You realized it went straight to that fit a long time ago, and it actually went, I think, probably halfway through. Let me see. It went halfway through the fair value gap. Did it go further? Let me see. I gotta get closer on all this stuff. You can't really tell. Hold on. Look at something on it. Okay. No, actually, okay. So it went to the bottom of it. It went to the bottom of the fair value gap. That's exactly what it did. So, yeah, but people probably mistake that as a 62%, and that's why the price started playing again. Not realizing that all it did was fill the monthly fair value gap, not it didn't fill all the way. Now, when things have to be mitigated, have to be mitigated in the phase. So, it has to be mitigated in the sell portion, and it has to be mitigated in the buying portion. Once it's done that, it's over with, right? That fair value gap could be fell face the earth, and it doesn't always have to trade you again because there's no more fair value. So, now, what do we have here? When we go Bitcoin, there's a fair value gap right here. I don't know why I was about to draw a new one because I already went there. No, it's daily. Okay, now I see where I screwed up. Okay, so yeah, there's a daily one there. There's a daily one. And it's weird that the daily one is bigger than the monthly one, but I guess that's okay. Okay. Oh, things are nested inside each other. That is where you want us to really start looking at where the bullishness is, because especially when it's good, but once it starts getting something like that, when there's a bullish fair value gap, that is taken by a weekly fair value gap. Like I said, it's going to go to it, try to fill these. It's going to fill both of them at the same time, basically. So, you have to fill the daily fair value gap. It has to fill the weekly fair value gap. So, I don't worry about any of them. So, maybe that's why I didn't call that monthly fair value gap right there. Because the daily's right there, and they're going to fill it. There's them, it's right above, right? So, these fair value gaps are imbalances or areas of the chart that it wants to fill. So, now that we know what that is, what it wants to do, that's called that 15 area, because that is what it was. There's that fair value gap. They have that written over here as the fair value gap. And then all I have to do is do that, and I can double click on the Fibonacci here. I can get rid of the 20 minutes 30 telling me. I only do it on weekends because that's what it usually pulls back to, is a 30 minute. I'm going to turn on, I want the Fibonacci. Come on, baby. Give me the Fibonacci here. Not the thing. How do I get the Fibonacci? There you go, okay. And the 23rd not here. Yeah, there you go. So take this off. And then boom, halfway through. And what's interesting is that below that 50%, that's 62%. That is the discount rate, right? That's the discount rate. That is where smart money wants to buy. It hasn't hit 60% yet. Of the fair value gap, I should say. So I think we might see it getting a little bit lower. I mean, to be honest, it should fill this entire fair value gap. So it could be done too. Whatever, the coordinate bar here. And I'm going base that's the most user, so it's usually the most accurate price. So 14,026. So if it gets that low, don't freak out. Just think to yourself, hey, this is probably right the closest to the bottom that we're going to be. Because there is another fair value gap, monthly fair value gap below here. But again, it's not necessarily that all fair value gaps fill, right? The good thing about this fair value gap is that we already have price action that has happened in those areas. Now, there was action that didn't happen in that area as well with the previous bull run. However, it doesn't always entice it to, stop, basically. A lot of people thought it would stop, top of the tape. And so, here, I don't know what this striking is, what it means, to be honest. It could, I may have not pulled this down all the way. I don't know what that would have meant, but either way, I'll do that. I will show you these. There's something for how you gap in here for you, that you can see it. And there's another one below it. And look right in the middle of it. Bullshit block. Now, the reason this is a bullshit block, technically the definition of bullshit block is a bear handle that is then thought of a formation that's then taken for a bullet. Bear handle, next handle, bullish handle, closes above it, right? By this part of that, it's up with the right handle because
start of it going down. So that would be, this would be red basically transferred over to this candle. Because it's barely moving. So it's the start of the process of going down. So that's why it's bearish. Red bull short, I should say. And it's right to the left. So I hate to say it, but it could actually get down to here. 12,000 or whatever this is. Let's see. 12,000 for 96. I had somebody tell me it's about 10,000. And I asked them, I was like, where did you get those numbers from? But man, if you really want a technical, then it's good. If it actually came down to here, to that bullish order block, but you're getting a territory where this is, if you ever look at a market maker buy sell model, they don't like to make consolidation boxes in the same area twice, right? So just unfortunately, I'm on the app. I'm not actually on the website or anything like that. So I can't look up market maker, but Google it, market maker. Sell model. That's all you gotta Google. Market maker buy sell model. That's all you gotta Google. All right, now that's all I'm gonna say because I've talked too long and I get this uploaded. Go to bed. Good night, guys. And wear your pants. How about that? Hang around chat house, man. Dude, it's been doing that lately. The windows are not gonna open. It's been fucking weird. Could you close it when I walk out? Just close it next time you walk out. It was fucking freezing. Because I was out. It was so still. I think my favorite video, but that's cool. Yeah, it's a pretty Alexa. Yeah. Fuck. Where's Uncle Chrome? Here's my view. I'm trying to get you up. I can make an app. It's on the old happy. Oh, where I'm having a good video. Knock me out like ever. Then I got my hope. I got good. Market 5. Just should do yes again. I'm up to almost 2 bucks. Yep.
Damn, the $2 out of it. I got something out of it. $1.25. Slowly builds out of that fucking loss. Just right there in miles. You gotta be fucking. No, no, yeah, it is. So you can't be open. The P4 file. You wanna just fucking record it? So, I literally just do it. I'm gonna get your line. I'm gonna do fucking lie to you. I think I did really long. No, it was only like an hour. I've done tons of shit in like an hour.
On that program.
Yeah.
Maybe it's just not a stuff open here. Like, you know what I mean? It's just a little time where you're making that.
Yeah. Come on, dude, we can fuck with it. See. Compressing it into a zip file. That'll do something to it. Just starting watching my fucking USB instead, maybe having some beers. That was pretty fucking cool. Fucking coming out the end. Oh, it's not. I was off the subject. Fucking popped up. Oh, our end dude. Yeah, this our end dude went out to go tubes. He said he just left Tyson to go for EPS. He said they're hiring right now. They need 33 people. Yeah, that one. It's like right around by DMV. Yeah. Yeah, so. Yeah, it's a bit. He's a bit sick. He's on
How do you guys find that? Just because I seen the fucking side of it. Oh, if you do that, that's what I'm saying. If it's anything like Amazon, I said, try that. You can fuck shit on you. You just don't borrow heavy shit you do this.
Yeah, he said it's not driving either. It's.
But I wouldn't do it. I mean, I thought like 8 or something like that.
Fuck that.
Alright. But you have to be worse because you got all day. Plus, you don't have a fucking 18 wheeler you can basically live out of. That'd be fucking kind of cool. I mean, just like the freeness of that, you know. If you're like freelance, you already bought your own truck and shit. That'd be cool.
Seasonal personal package delivery. Okay, there's a bunch of seasonal package delivery jobs. That's what he was talking about. I thought he was talking about like actually working in that facility. Alright. It didn't fucking narrow it down to Marion for some reason. Here we go. Warehouse worker package handler. That's probably what he's talking about. And there's also two that are package delivery drivers and driver help. Oh, that one. That one's Marion, Kansas. The other package delivery driver. That one probably part of CDO. Yep. The warehouse one. 15 hours, is what he told me. Shift twilight, 5 p.m. to 10 p.m. That sucks.
told me, he's like, dude, like, if you fill out an application, I'll probably call you within 30 minutes. Blue listing. Just doing it. Detail. Excellent. Look, okay, safe work environment, 401k, medical and dental, so much more. Gotta find a 10 though. That's like part time. I'm sure it's got more than that. Motherfucker. Your driver's license, that's not expired yet. I'd say if it wasn't Monday tomorrow, you should go get that shit taken care of. There's already a fucking flaw in this fucking new fucking operating system. 5 to 10 p.m. Monday through Friday. That's literally 25 hours.
What?
5 to 10 p.m. Monday through Friday. That's literally 25 hours. But there is a lot of benefits. Yeah.
Monday through Friday, what?
5 to 10 p.m. I mean, you could do it.
I mean, depending on what the benefits were, yeah. As long as it's got, like, probably it's not be ideal.
I don't know.
Like, this weekend, doesn't work. Hell, it's fucking out, work. Something wrong. Personally, if I get nothing, I like work fucking 8 because you're already fucking in the hard part, just get them going, you know?
I'm not done. That's why I'd rather fucking go eat.
So, you know, so Monday, Friday, Monday through Thursday, and, from like 6 to like 3 or so, 6 to 2 or whatever, like 8 hours. You know, I'd rather do that, get off at 2:30 or something. And you go 3 days a week on 1 day. So why do you go work all week and make fucking 45 hours? No, that's 5 days.
Right.
Fucking have a schedule, you can do that. Whatever. I used to work at McDonald's, I work 7 days a week, catch 30 hours.